This is Carl with your weekly livestock update for the week ending Friday, June 13th. Quite volatile week here. Looking at livestock, we saw the record highs, all-time highs put in on cattle. August feeders, 314.20. October fat cattle, 216.55 for all-time highs. Set those early in the week and then followed the week with selling pressure, really. Technical liquidation, cattle heavily overbought. And really, a lot of the strength we've seen in cattle is from the cash side. We did see the cash market rally into the end of the week. Sales at 235 reported in Texas, 240 in the northern market and feeders up 5 to 10 on the week, which has been the case. 5 to 10 this week, 5 to 10 last week, 5 to 10 the week before, in a pretty much steady cycle there. Was a little bit of concern in the market. We're starting to watch, I shouldn't say a concern, but something we're watching. Cattle weights, we're getting a lot more current. We're down to just 20 pounds heavier than last year at this time. Now, you look at where the weights were gaining last year, but what it really tells us is that feedlots much more current, it appeared to be this year, and maybe stabilizing and leveling out. Not seeing them ungodly heavyweights come through anymore that really weren't that great to begin with, more a talking point than anything. But regardless, cattle started to lean heavily overbought, overvalued, and then we're starting to get a little bit of some concern over future demand in the market. Here's the reason. The U.S. economy has somewhat stabilized. Sentiment's looking better. Consumer spending is holding in there pretty decent. And all things considered, the thing is the tariff costs are just starting to hit the U.S. consumer on their dry goods and other products they buy. At the same time, we're starting to see these record cattle values that are going flowing through into the beef side hit the retail market. For instance, last week we were in the grocery store and sirloin, 10.99 a pound for sirloin. You're not going to see big demand for your high-end cuts of meat if you're seeing, your sirloin costing that much. Especially now that it appears as though we could see gasoline values start to ratchet their way up. Gasoline gets more expensive, and you do tend to see demand for red meat back off, especially high-end cuts of beef. I know I sound like a broken record, but that's kind of what we're heading into right now. The retail is going to be watched very strongly. Packers very concerned, and rightfully so, over extending too much coverage at today's values if in fact we see consumers back off. So a little bit of something for everybody there. Bottom line is cattle are due for a correction. Nobody should be surprised that we sold off hard going into the weekend. Um, I wouldn't be too surprised we didn't see a little more selling pressure next week. I mean, get this market, a little bit more streamlined and a little bit more stable. Hogs also some contract highs here. We put in a contract high. Watching that October hog contract, 97, excuse me, 94.37 and a half for a contract high this week. That's starting to catch up to the spot market. Hogs Thursday had some relatively bad news come in. We had not very good export sales, down 71% from the prior week, second lowest volume of the year. So not that great. But then we counted around. We got some really friendly news for the hogs on Friday. The Chinese ag minister approved 106 poultry and pork processing plants in the United States for immediate trade. 83 poultry facilities, 23 pork facilities. Like I said, immediate. This is going to start now. And this is good news for a U.S. Hog industry, good news for pork demand. There was concerns we were going to lose all of China's hog business. And then we come around. I'm not saying we're going to send every bit of pork we produce to China, but this is good news. This is good news for a hog market that's been a little bit uncertain. We'll put it that way. Aside from that, We got the WASD numbers out this week. No big changes really to speak of across the board in either pork or beef production. Everything pretty much status quo there, and not too surprising. We're in the midst of the grilling season. I expect to see, like I said, domestic demand a little uncertain, but you're still going to see cookouts. You're still going to see demand. We just don't know what it'll be for. So with that, next week, we're going to start gearing up. Cattle on feed report comes out following week. Towards the end of next week, we'll get the cattle on feed report, follow that up with the cold storage report following week. Other than that, we're going to be watching also these weather conditions for out west. Pasture conditions reportedly very good, but yet we're not seeing big demand for stocker cattle. So we'll see how that comes into play next week. Until then, thank you for your time.